Hello traders, the title of the video is Elliott with a theorist explain his chart analysis. The financial instrument that we are analyzing today is Amgen Incorporated, EPIC AMGN, Alpha Mike Golf November. And we want to talk about Elliott with a theorist explain his chart analysis. We have a very interesting chart here. We see a trending first. I cannot zoom into it more here, so that's all I can do here. So with what I can see on my chart, we call this one the first wave of a higher degree. And this is the second wave. And this is the third wave. We are now in the fourth Elliott wave. This is a consolidation, the fourth Elliott wave right here. Some traders may say this is a triangle, all right? So talking about Elliott wave theorist explaining his chart analysis, we can see that the second wave has been prolonged, talking about the time it took before that second wave has ended. It has taken 12 years, can you see, 12 years, from 2000 to 2011 before that second Elliott wave is completed. So according to the Elliott wave theory, all right, if the second wave is prolonged, talking about the time it took, the fourth wave is likely to be swift, which means will be shorter. You will take a shorter period of time for the fourth wave to be completed. This is what we call the alternance between the second wave and the fourth wave. Because the second wave is also a complex a second wave, there is a high chance. Now we are not talking about certainty. All right, though we are talking about Elliott wave theory, it's not Elliott wave science. We are talking about a probability, possibility, expectation. All right, so this is what this is about the Elliott wave theory. So because the second wave is a complex second wave, there is a high chance that we may have a normal, okay, a fourth wave, either a consolidation, a normal consolidation, or a triangle, just a normal simple Elliott wave, a corrective wave in the fourth Elliott wave. Well, with that information that we have here, we can forecast that sooner, okay, very soon, we are likely to see the fifth wave, either at the end of this year or beginning of next year. All right, we will see the fifth wave coming out because it shouldn't take too long for the fourth wave as it did for the second wave to be completed. So by using the Elliott wave, the alternance of the second wave and the fourth wave, we can be ready to make excellent trading decisions. It doesn't mean that we will just place a trade to buy. Now that we see a consolidation taking place here, practically trading, those who want to catch the fifth Elliott wave should be looking for opportunity to buy either at the low here. That would be a better place. That's what traders are doing here at the low here. If you want to cash out here, that's fine. If you want to cash at the midpoint, that's fine. But the best, apart from this low here where one can buy, one can wait for a breakout above, okay, the consolidation and the retest. And one will implement a different time frame trading method to trade it. So there is a fifth wave brewing within this consolidation here. So how can we set the target for the fifth wave? Now, because we have a consolidation here, we can use market geometry by measuring the width of the channel and project it up here. So that will be one target. That's the first ultimate target for that fifth Elliott wave. If it breaks above it, we project it one more time. Anytime we set a target, we don't want to forget the midpoint target. Personally, I will set my target if the bullish momentum continues. Doesn't mean this video is for educational purposes only. I'm speaking to new traders. It's not an invitation to buy or sell. Amgen Incorporated is for educational purposes only. So don't use this video as a trading signal. Use it to improve your own Elliott wave analysis. All right. So trader must watch the media line of the second projected channel. Somewhere there will be more reasonable. All right. So first target using the width of this channel, project it out. Second channel target right there, ultimate target, midpoint target, the red point here. There's also a midpoint target somewhere here in the zone of $203 level. All right. So watch out that level. All right. If there will be a fifth Elliott wave, orderly fifth wave. But don't be surprised, my friend, if the price start crashing down all the way here. Now, the Elliott wave theory allow us to focus the market, but this is just an expectation. Anything is possible if we have negative economy news or a bearish market, talking about the S&P 500 becoming very, very bearish. This stock, nothing can stop it to come down more. So don't be surprised if it start coming down more. All right? Another thing that we can talk about here, there is also equality between the first and the fifth wave, because the third wave has been extended. Okay, all right, is it extended? Because I'm a bit careful here because I can't zoom into this section here. So I will use, in fact, in my mind, I would love to put my first wave here, but then will be wondering what's happening here. But because I can't zoom into it, that's why I leave it here. But in my mind, I prefer to put it here because I can zoom into that section here. I can see here. But I don't know what has happened in this section here because there was some pullback here. Sometimes you may look at it like this, but there are action here. A lot of things happen here, but we can't see them clearly. So with your permission, allow me to put it here as I'm thinking now, right here. And we want to apply Fibonacci extension to that supposed to be first wave instead of all the way here. Okay, so once it's 1.8, it break above it. That's it. So it's an extended. If you put it at the beginning here, once it's 1.8%, it breaks above it. So our third Elliott wave has been extended. All right. So now, if the third Elliott wave is extended, usually there is equality between the first and the fifth wave, talking about the length and the magnitude of the first wave. So this is the length of my conservative first wave instead of putting all the way here, as I explained to you already. And this is the magnitude of my first wave, talking about from the high to the low. This is the magnitude of my first wave. So I want to use the magnitude. I project it at the top here of the channel. It's bringing us near that red line at 247. We use the length, we put it like this, also bringing us again at 247. This is one way we can focus the end of the fifth wave. There are other ways that we can focus the fifth wave. So you may say to me, how? Then I'll say to you, check the playlist about the fifth wave, how market focus. How do I title that playlist? There are playlists that check the playlist. On our home page, talking about YouTube channel, the 24 Elliott wave YouTube channel. You see Elliott wave forecast, accurate wave forecast, or the fifth wave, whatever, blah blah blah. And I've already recorded a video when I showed today how to focus the fifth wave. So this is what we can do. So this is about Elliott wave theorist explain his chart analysis using the alternance between the second and the fourth wave, and also the equality between the first and the fifth wave. In all cases, we are looking for a trading setup. This is the nitty-gritty of trading, practical trading. We're looking for a trading setup. Then we implement a different time frame trading method to trade it. If the signal fail, well, we are out. So though the Elliott wave is giving us a bit of idea to focus what is likely to take place, we have an expectation as we see an opportunity, talking about a good reason why we should buy or sell, or talking about the trading setup. Now, practically trading, one must always use a different time frame trading method to trade it. As you can see, the current market pattern is a consolidation. Professional buying at the low here. This is a practical trading, and they are taking profit here. Now the price is forming a kind of a higher low here. Can you see that? Okay. I'll color it also into all. Be aware of that higher low that is being formed. Sometime you may note if you're going to have a fifth wave, you may start from here, say 1, 2, 3, 4, 5, or something like that. Okay, so watch it carefully. There's a higher low here. I'm talking about this low here along this pink line, so be aware of it. And now we are now at the top. If you want to enter here, be careful. Allow it to break above that pink line. If you extend it, okay, that pink line, all right. And we can switch now to the daily chart. You want to see, that's where we are heading to now. So there was a resistance here before, a double top, blah, blah, blah. So now we have that higher low here, which is good. What you can do, my friend, you can use the most neglected technical tool, which is the pitchfork tool, to help you to determine the possible path, the bullish momentum continue, to determine the possible path that the price may take. Have you used the pitchfork tool before? If you say no, don't be ashamed of yourself because you are not alone. There are many traders who never use the pitchfork tool. So use the pitchfork tool. As you put the pitchfork tool there, also draw the median line of each half of the pitchfork tool. Is that half? Am I cheating? All right, something like that. So it's a bounce back to retest the median line of the second half. That's where we are now. Now we will push it there to that pink line. Watch out for that median line of the pitchfork tool. There is a small angle here, and there is a hot spot trading zone in this zone. Watch it carefully. All right, another hot spot trading zone right here. All right. So this is the end of this tutorial talking about the Elliott wave theory, the alternance between the second wave and the fourth wave. If the second wave is prolonged, talking about the time it takes, all right, before it's completed, it's very long, there's a high chance that the fourth wave will be a shorter. Talking about a shorter period of time it will take for the fourth wave to be completed. On the other hand, if the second wave is very swift, quick and fast, talking about the time it takes, there's a high chance that the fourth wave will be prolonged. And if the fourth wave is prolonged, talking about the time it takes for the fourth wave to be prolonged, we are likely to see the fifth wave extension. So there are many things we can do with the Elliott wave theory. And also, if the third Elliott wave is extended, usually there is equality between the first and the fifth wave. So the demonstration that we are doing here is a demonstration of the Elliott wave theory, giving us an expectation, giving us a bit of idea what is likely to take place. And now, practically trading, we must find a trading setup without assuming anything, and we use a different time frame trading method to trade it. In the signal fail, well, we just blink, 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 and all right, look for the next trading opportunity. All right. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about Elliott wave theories explaining his chart analysis. If you find this video truly useful, let us know by giving us the thumbs up. If you think that George, well, this is another useless blah blah blah, let us know by giving us the thumbs down. This will put us under pressure to improve the next recording. If you think this is an essential tutorial, feel free to share with your friend on Facebook, on Google+, and also on Twitter. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott wave theories, explain his chart analysis. Happy trading to you all and speak to you soon.